This has never happened in Australia's history. We are currently in the midst of the fastest rate hiking cycle on record, and property prices are rising. But not only are they rising, but the rate at which they're rising is actually increasing. What is going on, and how is that even possible? Well, let's begin by having a look at the data. And I want to start by looking at what happened to property prices, not just in May, but also in April, to show you how fast property prices are rising. So here we have the data from CoreLogic. Looking at April, dwelling prices increased 1.3%. Now, that might not sound like much, but if you annualize that, which means that if property prices were to rise on average by 1.3% for the next 12 months, that would mean that property prices would rise over 15% in the next 12 months. That's significant. But then look what happened in May. Property prices in Sydney rose an astonishing 1.8% according to CoreLogic. Now, if you annualize that, that means that property prices would rise about 20% in the next 12 months. These are boom time rates of growth. Let's look at Melbourne. In April, property prices only grew by about 0.1%, but in May, 0.9%. Brisbane, including the Gold Coast, in April, 0.5%, but in May, 1.4%. Adelaide in April was 0.2%, but in May, 0.9%. And Perth, 0.6% in April, but in May, a very healthy 1.3%. So it's clear that property prices are not just rising, but the rate of growth is increasing. And we can see that by property prices breaking suburb records across the country. Sydney Terrace sells $400,000 above reserve as auction clearances rise. Nearly 8 out of 10 homes put up for auction at the weekend sold, the strongest result in 19 months, as buyers shrugged off the prospect of another interest rate increase on Tuesday. Now, this article is obviously taken from before the recent rate rise, but it still shows you just how strong the market is. And they're talking about clearance rates not just being the strongest in the last 1 or 2 months, but the strongest in the last 19 months. So 19 months ago, when interest rates were not expected to increase, where interest rates were still at record lows, and right now auction clearance rates are as strong as they were back then. And this is leading to record prices in many areas around the country. Have a look at this. Home buyers continue to flock to larger homes, however, such as the fully renovated 4-bedroom terrace on just a 203 square metre lot at 32 Malcolm Street, Erskineville in Sydney's inner west. The house was sold under the hammer for $4.2 million. But get this, it represented a $400,000 increase above the reserve, and it smashed the suburb's existing record of $3.7 million. When you start to see suburbs creating new records, that resembles boom times, right? But what's going on? Well, let's have a look further into the data. Australia's housing market rips higher, and it's Australia's housing market, not just Sydney, not just Melbourne, or whatever local paper that you're reading that's talking about that particular area. This boom at the moment is very much nationwide. CoreLogic's weekend auction clearance rates were the strongest since October 2021. Sydney led the way, recording a preliminary clearance rate of 79.6%, the city's strongest since mid-October 2021. Melbourne recorded a preliminary clearance rate of 75.8%, which was the 8th consecutive week above 70%. But have a look at this chart, capital city auction statistics. And let's say what happened last weekend in Sydney, the dark purple bar had a clearance rate of 79.6%. But 12 months ago, this very same weekend, the clearance rate was only 53.3%. In Melbourne, we're sitting at 75.8%. 12 months ago, we were at 58.8%. Brisbane auction clearance rates, and Brisbane is a market that traditionally isn't strong for auctions. They had an auctions clearance rate last weekend of 76.9%, much higher than 12 months ago when we were looking at 56.4%. But then If we look at the next chart, it starts to reveal why property prices are rising. Last weekend, auctions in Sydney, there were 754 compared to 912 12 months ago. In Melbourne, there were 750 compared to 1,245 a year ago. And if you go down this chart, you can see that in every capital city, there were more auctions 12 months ago than there are right now on this very same weekend. The only exception being Tasmania, where they had one auction last weekend and none this weekend last year. So what is this telling you? It's showing you that there just aren't enough properties on the market right now. Sellers are holding on to their properties. They're not selling. Low auction volumes have clearly created FOMO, fear of missing out in the market, with the number of homes auctioned, which was 1,832, is down a staggering 31% from the same weekend last year, where we sat at 2,644. Now, this is important because, as you can see in the next chart, auction clearance rates have historically been a strong leading indicator for house price growth. Now, what's a leading indicator? A leading indicator is an indicator that you can track, and what happens then is that house price follows that, okay? Whereas a lagging indicator, it's an indicator that sort of reports what's happening in the property market after the fact. And when you're trying to find out, well, what's going on in the property market and where are the best places to buy, you want to focus very heavily on leading indicators. And auction clearance rates, especially in Sydney and Melbourne, two markets that have the majority of auctions, it's a very strong leading indicator. And what you can see from this chart here is that the blue line represents the auction clearance rates. And what you can see here is that whenever the blue line goes down, property prices go down, the red line, they go down shortly afterwards. But then when the blue line goes up, the red line follows shortly afterwards. Look at what happened in 2022. You've got the blue line going down, then it starts to go up again, and soon afterwards, the red line, which represents property prices, starts to rise again as well. That's why these strong auction clearance rates, and they're being consistent now weekend after weekend, are pointing to not just short-term growth, but sustainable growth in Australia's property markets. Now again, this is not everywhere, so you do need to make sure you're doing your due diligence, but the overall trend is definitely positive, especially if you are a property investor. This next chart plots how property prices have rebounded according to CoreLogic since February of 2023. What you can see here is you've got this red dotted line. May 2022 represents when the RBA started increasing interest rates. What happened? Well, property prices initially went a little flat. They kept increasing in Brisbane, but then they started to fall, okay? And then everyone expected Armageddon, property prices are going to crash. But then look at February 2023. From then, property prices have started to rise. And as I said earlier, one of the major factors is there just aren't enough properties on the market that are available. If you speak to many local real estate agents, what they'll tell you is this: they don't have a shortage of buyers. They have a shortage of properties. Their biggest challenge is actually finding stock to sell. They have a shortage of sellers, not buyers. But there are two other factors contributing to property prices rising: building crash, migration surge to inflame housing crisis. A plunge in new home building to a 10-year low will collide with the arrival of a record 1.5 million migrants, worsening housing shortages, driving up rents, and inflating real estate prices, say property executives. The new figures revealed in the federal budget forecast a widening gap between home construction and population growth over 5 years. Now, in recent statements from the RBA, Governor Philip Lowe said that we are increasing our population by 2% based on these migration levels, but we're not increasing the supply of houses by anywhere near 2%. So what is that going to do? It's going to force rents higher. It's going to force property prices higher. Property Council Chief Executive Mike Zorbas said the federal government must match its targeted approach to migration with the same focus on housing investment and better planning. The population growth outlined in this budget highlights the need for faster and better housing delivery and planning across our cities, he said. Housing Industry Association figures show starts on multi-unit dwellings, mainly apartments, have fallen from a peak of 118,000 in 2015 to 2016 to about 70,000 in 2022 to 2023. So we're increasing our population. We've got more people coming into the country, but not enough houses right now. And the number of new builds are at record lows. This gap between demand and supply is only going to keep increasing, both on the rental side and in terms of property price growth. KPO Property Group Chief Executive Mark Bainey said there was little incentive for developers to, keep building new homes because interest rates were through the roof. And this is the segment of the market where rising interest rates have had the biggest impact. It's on new builds because you've got construction costs rising, you've got interest costs rising. So buyers are going, well, why do I want to engage in a new build where I don't know how much it's going to cost me in terms of the construction? I don't know if I'll be able to afford the loan for so long while I'm not getting rent, especially if you're an investor. And so there are new builds just not happening right now. The cost of construction is at all-time highs, and you've got falling sales prices at the end of the project, he said. However, with these predicted record migration numbers coming to Sydney in a market which is drastically undersupplied, and again, he's talking about Sydney here, but this applies to multiple areas around the country, it's looking like we're heading towards a boom in the medium to long term. We don't have any product to sell to these buyers. The costs of new homes will rise and will lift house prices in the process. So there you have it. Property prices rising on a pretty much nationwide basis. Obviously not everywhere, so you need to do your due diligence, but more importantly, not only are property prices rising, but the rate of price growth is increasing almost everywhere, driven by not enough properties for sale right now, a massive FOMO, fear of missing out by owner-occupiers. That's why they're willing to pay almost any price just to get the property that they want. We've got migration coming in at record levels, increasing that demand, and construction at all-time lows. It is a housing crisis, and it is going to force rents higher, and it is going to force property prices higher. And if you are a property investor, and if you can afford to enter the market right now, it certainly seems like it's a great time to get into the market, because with all of these issues in our broken property market right now, what do you think will happen to property prices when interest rates do start to come back down again? I expect that you're going to see some record booms, and that's why I've been saying that 2023 is a great buying opportunity. And if you want help to do your due diligence, to work out how do you find the best areas for you to invest in, check out the link in the description for a free copy of both the digital version and the audio version of my book. I'll see you next time.